Okay, hi traders, here's a new video. First of all, the risk warning, your invested capital might be at risk. Don't trade with money you cannot afford to lose, and this video is not investment advice. So this video is another binary option, binary trading, binary option trading, options trading video, yes, of those kind of concepts which I have explained in my ebook. Get this ebook, you'll find the link in the description. This ebook contains the most important candlestick pattern, chart pattern, and binary option turbo trading concepts, market condition, trend identification, rejection, and candlestick math, and a lot of more concepts which can be applied to any kind of time frame, any kind of financial instrument, and any kind of broker. So get this ebook, you'll find the link in the description, and in the description you will find also the link to the Facebook group. So yes, I get almost often this question why I do not trade or do not do live trading at OTC market. Yes, and I'm telling you always, I cannot trade OTC market because I'm a European trader, and we European trader do not have the OTC market. The OTC market is not allowed for European trader, and that's the reason why I'm not doing any kind of live trading at OTC market. I have done OTC market trades a few years ago. It was possible also for European trader to trade OTC market, yes, but now it's not anymore possible. And that's the reason why I'm doing this kind of explanation videos of those trades which I have done at weekend, because you know at weekend the market is closed, and to don't waste time, yes, I'm doing this kind of explanation videos to educate you well on those kind of trades. So yes, I will do this kind of education stuff based on those kind of concepts which I have explained obviously in the ebook, and especially, and I can only recommend to anybody to get through those kind of concepts which I'm naming here. First of all, you should understand all kind of candlestick patterns, yes. Watch also the mindset series, which is at the beginning of the ebook. Watch the related videos of this, yes, because it's important that you understand what is the difference between a newbie, yes, a noob, and a professional trader, yes, and yes, and a consistent trader, yes. That is explained in this kind of mindset series, which I have done almost sorry, almost 10 months ago. Yes, that is already so old, but it's still yes, it's still valid, and I would not change not even one sentence of this mindset series, because that was what I have explained 10 months ago is still valid. So watch those kind of things about the mindset. It's one of the most important. You can see on this mindset series also at what level you are. So wait one second. Yes, you can see that on this mindset series also at what level you are and what you need to be consistent, profitable. So obviously the candlestick patterns that you should know them inside out. Yes. After this candlestick patterns, you should know also all those kind of things about the chart pattern, especially those kind of things like the double top and the double bottom, the J-hook pattern, yes, which is a really nice pattern, which where you can expect a nice trend coming up after this. The last kiss, I see so oft traders who are doing wrong the last kiss, yes, the pullback after a breakout. Mostly traders are going here into a continuation trade or here into a continuation trade. Yes, important here is to understand that the profit target of a double top, double bottom, head and shoulders pattern, or every other kind of breakout is mostly the same high from the neckline to the top. Yes, the same distance. That means in this kind of scenario, this distance here will mirror to the downwards. That is what the profit target is. And at this level, you should expect any kind of reversal coming up with this, what we call here a pullback. Yes, this kind of scenario here. Yes, and there are two types, the complex and the simple one. Watch this video. This will happen not only after chart patterns. This will happen always if price, or mostly if price will break out any kind of EMA, Fibonacci level, support and resistance, trend line, Bollinger Band, and so on. Yes. So this is one of the most important concepts, which has a probability above 80%. Yes, this is a high probability trading setup. So head and shoulders pattern, yes, and all those kind of chart patterns and candlestick patterns. Watch those videos, understand these concepts because they are important. After this, the chart patterns. If you understand triangles, wedges, flags, and so on, you are an advantage because you understand in what kind of range market is moving. I'm not naming them, but you should know them. You should recognize them. You should understand how to trade them. And you see here the same, the pullback, the last kiss. Every chart pattern has here the same thing. Yes, you see here always the pullback from the trend line here, pullback. Yes, pullback. Yes, that is exactly that. And you see here, the profit target is the same high like the base. Yes, I have explained this in these videos. You have to apply them only to every kind of chart pattern, candlestick pattern, and so on. You have to be creative. You have to apply them, and you have to be open-minded. Yes, I cannot explain you everything in detail. Yes, because you have to switch on your brain, yes, to understand those concepts and to apply them, because it's not only learning, yes, like the 1 per 1, yes, the 1 multiply with 1. You have to go beyond of this. You have to understand the mathematics behind this. So, and here we are at the topic, candlestick math necessary. Yes, you need the candlestick math. Then you need the 4 keys. Yes, this one video and the further video, because there were so many who didn't understood this video here, where I talked about the different parts, the 4 keys, yes, the trend, the key level, the candlestick pattern, and the rejection, and how to get those things together. Market condition, identifying of the trend, yes, by the EMAs, yes, you are using the EMAs, you should know them. Fake breakouts of all kinds, yes, should be also covered, and you should understand this. So reversal, retracement, the highest probability trading setups, yes, all those kind of concepts should be known by you. So then there comes up the no rejection trading setup. This is already a little bit advanced. You should know a little bit more to understand those things. And then we are coming to major support, major resistance. And after this major support and resistance, how to trade at those kind of levels. Then the support and resistance level based on the candlestick patterns, really important. Then the candlestick progression, yes, progression, the ratio between real body and wick, and how strong a candle is, where the pressure is coming. The analysis part, yes. The prediction of the running candle, the next candle, the entry point, yes, and the difference between purchase time and expiration time. So it was a fast overview of those concepts which you should know about. Then obviously the market condition which you should seek, and what kind of market condition you should avoid, that is important. And then obviously this kind of things where I've talked about the EMA and the Bollinger Band, because you are using them. If you are using them, then you should understand what they mean, yes, and that gives you a fast overview where price is in relation to the market. So that was the fast overview of those most important candlestick pattern, chart pattern, and concepts. And now we are jumping immediately into a trade, and I will show you those things which I named now in this trade, how important they are and why they're important they are. So, okay, let's see. I prepared this kind of video here, and you see here this kind of concept which I have named already. Here I have used, and that should be seen immediately. As you see here, I'm using here the crossing Bollinger Band EMA crossing stuff. Yes, you see here the crossing here. That is this one. Yes. Wait, I will do this with the arrow here. We have this crossing here, and you see how nice this support and resistance level is. That is the 40 period 1 deviation with the 20 period 2 deviation Bollinger Band strategy, which I have explained in the ebook, and which I have explained also under the best strategies. Yes, and you see here always where the crossing is, yes, you have a nice support and resistance level. Yes, here crossing, that are nice support and resistance level, and you can here not, yes, but it could be also, this is the area, and also if it doesn't cross, they are already close together, yes, and you can also use those one here, because you see they are here, this is the area jetzt here, yes, you see, this was the area, and you see here a nice reversal from this area, because it got in a confluence with the 100 EMA. So, we got here an uptrend. Yes, after an uptrend, we got here some kind of downtrend, minor downtrend. Now we are getting here what? Yes, exactly a double top. So, and as soon as I enter into a trade, I will stop the video and then I will discuss with you what I have done here. So I'm waiting here because I have to wait for the next candlestick. Yes, because it was not clear if this candle will break through this area. The 20 EMA is here the neckline in combination with the middle Bollinger Band. And I was waiting to understand what price will do here. And this candle crosses with the 20 EMA. It closed below this 20 EMA. As you see, price is trying to go up further. Is not doing this, yes, and now we got a rejection. Now would be the right moment to enter into a put, yes, but I was doing something else. I don't know what I'm doing. I'm doing here, yes, I'm drawing here the crossing of the EMAs, yes, the Bollinger Bands, yes, the crossing of the, and then I'm coming back, yes, and here I missed the trade. I switched the Bollinger Band from the 41 to the 21, yes, like I have, after I have drawn the EMAs. So, and then I entered here into a put, yes, after price got a second rejection here from the neckline, and that is what you can do too. If you are not sure, yes, and you get out of the money often when you trade double top, double bottoms, Bollinger Bands, no, not Bollinger Bands, engulfing candles, pin bars, and so on, you can enter for a 2-minute trade, yes, for 2 candles into a trend continuation trade after them, or also 3 minutes to get much more sure, yes, and then you will obtain at least an 80% success rate because you are not only fixed on one candle, yes, because often price can retrace back and then, sorry, you can get out of the money because it needed more than one candle to continue in this trend, yes, and that is what I can only recommend to those one who are facing out of the monies based on the retracement after such kind of chart pattern. It's not obligatory that you are doing 1-minute trades. Yes, you can do 1 minute, 2 minutes, 3-minute trades, depending how often you enter too early. If you enter too early into a trade, yes, you will get out of the money by doing only 1-minute trades. But if you are doing here, for example, you see here 2-minute trades, and maybe you could here do also 3-minute trades, yes, then you get a nice nice in the money, big in the money trades. Yes, so okay, I will do here some kind of you see it's coming back here. That's okay, and then I entered here again into a put. Why I entering here into a put? Because we have here a nice support and resistance level. This double top is giving me the conclusion that we have still a downtrend. Yes, and this candle here is showing me selling pressure, and I entered into this put trade above the closing price or above the opening price of the previous candle. It was a clean close in the money, yes, because we are here in ranging market, yes, but it was in the money because I entered really at a nice point far away from the opening price of the previous candle. Yes, that is what important. And this wick here is showing me huge selling pressure. Yes, and so but I didn't enter into a trade. Yes, because you see I missed this, but it would have been a put. Yes, in my opinion. Let's see what's happening, because this wick here was showing selling pressure, yes, and let's see what's happening. Maybe I'm right, yes, and you see price is pushing down, yes. Also, if this looks like an engulfing candle, a bullish engulfing candle, but this bullish engulfing candle has not it's not a guarantee that the next candle will be a bullish too. You see, it would be here really close in the money if you would enter here, yes, but you have could done a really nice put from this level here, yes, and then this would have been in the money because this kind of downtrend, yes, is clear, and this wick here was showing selling pressure. So let me do a little bit fast forward because I don't have done a trade here because I was not sure what's happening, because you see flat market, ranging market, yes, and so I was waiting to understand better what's happening, and then I'm entering after I saw this kind of doji, which showing me selling pressure again. It got a rejection from both, from the 20 EMA and the 50 EMA. And that is what I have explained. This was a pullback. Yes, the last kiss from this support and resistance level. Price breaks through it, got a pullback. This is nothing else than an evening star, and then I entered here after this candle into a put because I was expecting that price will continue to going down because of the continuation of this upcoming downtrend from this double top, yes, and maybe after this price would go back and trying to touch this neckline, but I think the price will not touch anymore the neckline. I think that price would continue to going down because we got here already the pullback from this level, and that was a simple pullback like this one what I have explained in the ebook and I have shown you a few minutes ago. Yes, and after this I would do another put, yes, because this everything is showing me that price will continue to going down. The 100 EMA is going to flag 2. The Bollinger Band is preparing to do a put. The 20 EMA and the 50 EMA are pointing down, yes, and that is a clear trend continuation trade here, but you should do this only if you see any kind of rejection from this doji here, yes, from the high of the doji, because you see here the concept of the change of polarity, support, resistance, support, support, yes, and so you wait till price will hit this level, and on the rejection you will enter into a put. Important here is that is also what I have explained in the ebook about the evening star and engulfing candle and so on, yes, that you wait that you hit this level here of this doji and then on the rejection, because this candle here is also a sign that we have here selling pressure, and yes, and that is what I would expect here. Price goes up, touch this level, got a rejection, and then you start into a trend continuation, and that is a 75 to 80% continuation trade. That's with a success rate of 80% because it's an evening star in the right context, in the major downtrend after a pullback in form of an evening star. So that was already. If you like this video, do a like. If you didn't subscribe, subscribe to my channel, and if you have something to say, drop me a line in the comment section. So I would say stay safe and bye bye.